We start today's market talk. Trump's moves are boosting stocks, but overseas. So what is happening is S&P 500 is now lower than where it was when Trump won elections in November 24. MSCI Germany is up 6%, MSCI Japan is up 5%, MSCI China and MSCI India are higher by around 7%. So US markets, which had gained at expense of rest of the world, are now correcting and the trend is getting reversed. Now the market outlook, what has happened this week was Federal Reserve has slashed its US growth forecast and lifted its inflation outlook. They announced that it was slowing down, that the economy was slowing down, and they are slowing the pace of quantitative tightening program, lowering the amount of US Treasury debt it allows to roll off its balance sheet each month from 25 billion to 5 billion beginning in April. That implies higher amount of liquidity in the system. Now, if the liquidity is not moving into US markets or US bonds, it will go to the rest of the world where the yields are better. So at the end of the day, after this announcement, US equities were higher, 10-year yield came down. Now the Fed's new forecast, what it is signaling is a stagflating economy. Make no mistake, if the growth rate is coming down and the inflation is going up, it is stagflation only. So the Trump's policy of steep tariffs on Chinese-built ships will also make the US exports less competitive, impose hefty cost on US farmers and disrupt the global trade. So US economy will start feeling the effect of these issues. Now, what is happening here? Weaker dollar, lower oil prices, and monetary stimulus at home has happened, and Indian equities are likely to have turned the corner. Now, the slowdown which has been induced due to Trump's policy could force early rate cuts and keep 10-year yield low in the US. And dollar index, I'll show you, has also given up a lot of gains. So dollar index has come down, 10-year yield has come down, and US may, Powell has given a signal that we will do 2 rate cuts, etc. So they are more bothered about growth than inflation. Now the weak dollar and lower inflation helps rate cuts in India also, because RBI is not constrained because of higher cost of goods, imports and other things. While RBI has done a monetary and fiscal stimulus, which should aid back-ended recovery in growth. Even the government is spending money, so that should help the growth. If there is peace on multiple war fronts, crude prices will be lower, leading to lower inflation. For India, higher share of service exports relative to goods export is a positive, and there is also a possibility of bilateral trade deal, which should help the sentiment. In my opinion, with this momentum, I'll show you on charts, Nifty can reclaim 24,000, may not be on a straight line, but it can easily reclaim as valuations of large caps were reasonable. And it is all play of liquidity. So if you have bought stocks of questionable fundamentals in this in the euphorian phase of 2024, this is the time to trim positions on rallies and be with good stocks. Now, another problem is Trump has said that from 2nd April, the US will charge India the same tariffs they charge us. So increase in India as worked out by an institution would be around 17% hike due to tariffs. Now, what is happening with Trump's administration is that there is always on these kind of tariff dates, there is enough confusion on extent of tariffs and on timeline. So assume there would be a lot of confusion. Another thing which Trump is doing is that if a country levies VAT, value-added tax, US tariffs would also rise further by the VAT rate. So it is not only tariffs, the VAT also is being considered. Now, by reducing tariffs, particularly on industrial inputs and key imports, India can boost its manufacturing competitiveness, attract foreign investment, and strengthen its position in global value chains. there would be few tariffs. One would be on farm produce, which will pose a risk to domestic farm income. Autos, chemicals, and pharma may face export risk if US tariffs rise. But key industrial and intermediate inputs, which constitute 65% of India's imports. So you are importing electronic equipment, which you are putting into various stuff and then exporting the equipment out of India. They are 65% of India's imports. Lower tariffs will help domestic manufacturing and you would be part of the global value chain. So it is not bad. Now, why this rally took place, I'll just show you very simply. So if you see this, this is from Sensible data. This is 17 March data. So on 17 March, broadly if you see, FIs had 1.72 lakh positions in futures which were short. Right? On 21st March, that was on Friday, this has come down to 96,750. So every day they are covering their short positions and added long positions in index futures. So you see the change, it has become half. Now this 96,000 can go down negative also or go down positive also and become net positive also. That means they are net long. Right now they are net short, but so that is one issue. This is till you can say on stock futures also, but they were bullish, and that bullish positions have increased. So they were bullish on stocks, and that has increased. Options are generally hedging their position. So the index, and they were selling stocks in cash. Now they have started buying, irrespective of whether it was FTSE rebalancing. So firstly, this is FIs. Next is FIs are proprietary firms, hedge funds, investment banks, pension funds. These are all sophisticated investors who are right most of the time in FNO. So if FIs are bullish, market goes up, and bearish, then the market goes down. So if you can see yourself over the week, they have directly turned bullish and their long positions have been added and short positions have been cut. So that is a clear sign of short covering. Now come pros. Now, who are these pros? These are trading firms with broking membership who trade with their own funds and on their own terminals. Even foreign funds and high frequency desks that trade through their own broking membership are also included. So these pros include the HFTs and high frequency traders and foreign funds, etc. When again, like similar to FIs, if pro is bullish, market is expected to go up, and bearish, then the market is expected to go down. So what was their position? If you see here, they were bearish along with FIs. They had around 25,000 short positions. They tried to add, but now they are cutting. So they are still indecisive while FIs have turning bullish now. So they were indecisive, but now they have started cutting their positions. Now, if you see here, they are indecisive here. They have short positions here, but they are on index options. They are long. So they are hedging their positions. Now comes clients. Now, who are these clients? They refer to people who trade through brokers' terminals. So includes HNI, small fund companies, trading desks that execute their trade through a broker. Mostly they are wrong and they are counterparties to the FIs and pros. So if you see here, on 17 March, they were net long 1.34 lakh positions. Now they are net long 51,500 positions. That means what? They are reducing their long positions and adding short positions. Like if you see here, on 21st March, they have added short positions. Stock futures, nothing great. And index options, they were bearish. Now DIIs. DIIs are AMCs that invest in mutual funds. Basically, their positions are related to hedging. But they were also on 17 March, they were bullish with 62,000 positions, and they were bullish. They are even bullish now. So this is a hedging position. So this is what it is. And they were buying on 17 March in cash, and they are selling now in cash. So if you see net on 17 March, you add these two. This is roughly 2 lakh short positions, and you add these two. This is roughly 2 lakh long positions. So basically, in the trade, FIs and pros are on one side, and clients and DIs are on the other side. Now you see here, it is 1,30,000 short positions here, and 51 and 74, 1,25,000 long positions here. So if you see the trajectory of the market, it is driven by FIs, and see, they are long on stock futures, they are long on index options, and they are long on stocks. And market is behaving the way it behaved, that 1,000-point rally, nearly 1,000-point rally in a week in Nifty only. Rest of the indices have moved higher. Now let's see another data. Let's compare these FIs future positions with the Nifty positions. Now, if you see here, every day they have added longs and they have been bullish, and Nifty has moved up 0.5 to 1% plus. So this is bullish. Now for 2 days, they added short positions. Nifty was bearish. Here, they were again bullish, added long positions. Nifty was bullish. Here again, they were bullish. Nifty was going up. And here they were bullish, but they were adding positions were very less. So Nifty was generally flat, 0.0, 0.02 and 0.17. So net, if you see here, on 20th February, when this contract started for March, they were net short of 1.89 lakh positions, which has come down to 96,000 now. So if you see, it has nearly come down half, and this is cash buying. So if you see here, last 3 out of 4 days, 3 days they have done net cash buying, and earlier the DIs were buying, and now they have started selling. So it is very clear that what are the key people who are impacting this market. So this is the kind of data which is impacting the market, and it is so clearly visible on every day with the Nifty moves. Okay. Now we'll see the US data. So if you see here, now the US bond yields have come down. So they have retraced roughly 50% of the complete rise from 3.6. So if you remember, in September onwards, the US bond yield started going up, and from October beginning, the Indian market started coming down. And here they reached the top for 4.8. Now they have started correcting because the dollar is weakening and money is moving out and all that. And there is more people who are buying the US money, moving out from US equities to US bonds. So if there is more money chasing fewer goods, then the price goes down. So the bond yields have come down. And it was inevitable that if the bond yields are coming down, then the emerging markets would recover. And last week I mentioned it to somebody. We were talking that Brazil market is recovering and there's bouncing back. So it is inevitable that we will also bounce back because money is moving to emerging markets, and it happened last week. Now, US indices, what they did was they snapped a 4-week losing streak. Fed played a big role as they held the interest rate steady. But the dot plot, which they do, showed lower GDP projections, higher core PCE inflation expectations, and 225 basis point rate cuts this year. So that is another reason why the bond yields are coming down. Fed chair said that the inflation is caused by tariffs, which would be transitory. He can go wrong. Earlier also in 21, he was saying the inflation is, and then we had the biggest interest rate hike in the US. Now, what is happening is in the US is a lot of US companies like airline stocks have revised guidance lower due to Dodge's spending cuts in government trouble, while companies like FedEx, Micron Technology, and Nike have cut their revenue guidance. Now let's come to dollar index. It has corrected, and it has corrected roughly 61% retracement from the high. From the rise it took from 100 to 110. Now it has come down this thing. So at this level, there is always, after this much of fall, there is always retracement. There would be a rise, and then I think it should start falling. And this is what will drive the rally in emerging markets. And you can see the impact of weaker dollar on USD INR. So the rupee strengthened by around 1% and has come down to 85.96. That is another boost to the stock markets. The Brent crude is steady at around 70 odd dollars. So that is not moving, and it is below that long-term declining trend line. Gold, if you see here, it is in a different path. This is basically considered a safe haven and thrives on uncertainty. So it was on a particular trajectory, then the trajectory's inclination went up, and now it has gone to another inclination hit that 3,000 odd dollars a mark, and it can go up higher also, or maybe some profit booking and keep continuing. But now if you see here, the inclination is again trending upwards as dollar cools off and the bond yields come down in the US fall. Gold can always move higher. Now this rally, if you remember, it started with in 2022. This rally started in gold when the US had impounded the Russian currency reserves. So then the people started shifting to gold, etc. So now all the central banks are diversifying, buying gold, so the gold prices are going up. The problem with these high gold prices is that the gold loan companies will do well, but the jewelers will not do well, as nobody will buy gold at such high prices. Now the another thing which is seeing a reinflation trade is copper. I mentioned about this, that now it is testing its all-time high. This is basically because the US is importing more and more copper before the tariffs come into play. So there's a lot of demand, but now this is rallying, and now it has reached that all-time high. Now the money is moving into other assets, so the Bitcoin is now kind of below the 20 EMA on the weekly charts. So it is still consolidating in this 20 and 50 EMA. Let's see where it goes. Now, if you see here, Nasdaq, this was the trend line which was going up. It has come down below the trend line. Now it is consolidating at these levels. So that 4 weeks of correction, now it is consolidating. So we'll have to see which direction it goes. Similarly with Dow, again, it was on an upward channel. It has corrected, come below that. So again, there was a bounce last week, but let's see how much it is sustainable. Now, the interesting point here is about the Indian government bond yields. So if you see here, I had told you to put some money in G-Secs, because not only you will earn the yield, you also earn that with the yields go down, the bond prices go up. So here, if you see here, it has now come to 6.62, and it is expected to hit 6.5 moment in April. A rate cut, etc., is announced. So the bond yields in India are going down as inflation is cooling, and RBI is expected to do a rate cut, and the government is also expected to borrow less. Now coming to Nifty, this is a weekly chart. So if you see here, Nifty had a 4.26% rise. It is at the cusp of 20 and 50 EMA, around 350, which is the level. Once it breaks out from this level, then it can go higher. It took support at 100 EMA, which is generally the support over a period of time also. Every time it dips, generally this 100 EMA provides support. So it has taken support here. It is a very strong candle. So let's see if there is a follow-up action. Coming to daily charts, this was the declining trend line. Now this has been broken. Nifty here on the daily charts is at 100, and you see the 100 and 200 EMA are generally at the same place, 23,375. So this is from where the Nifty stopped on Friday. It went up to 400 odd, but stopped there. See, the high was 402, stopped there and retraced a bit. So we'll have to see, but very clearly this in this rally, the stop loss should be 23,000. That is the base of this declining trend line, or the 50 EMA. So till the time it is above this, you can keep taking long trade. If it breaks this, then you will have to see if the next support would be this 22,800, but I think 23,000 should hold. And this now if you see here on the RSI, it is in momentum, so that is good. Now coming to hourly chart. So if you see here, there was a gap here. This is this week's action. So Monday was flat, but then it took off with a gap on Tuesday, and then there was a continuous rise above the 20 EMA. So if you see, it is rising above the 20 EMA clearly, and now it is above all the moving averages, and 20 EMA has broken through even the 200 EMA. So that is a positive signal. All these gaps have been filled. So now, though it is oversold slightly, so it can come down and then rise. So we'll have to see this. Now, the other thing which I wanted to show was to see there is a confirmation of a broad uptrend. What will give? This high was 23,750 or 23,800. So if in this momentum, Nifty goes above 23,800 and then retraces, so what will happen is, and then retraces up to any level and then rises again. So that will change the trend from lower high to lower low to now higher high and higher lows. So that would be a clear signal that now the trend has changed. Now coming to Bank Nifty, it was up 5.27%. Friday, a lot of rally took place because of a lot of money moving into ICICI Bank and Kotak Bank due to this rebalancing. But it also took support at 100 EMA. On the daily charts, this is looking stronger. So it has formed a clear W pattern. It has broken out and broken out through all moving averages. Now it is at 50,600 odd. So from here, I think the first resistance would be somewhere around these 51,600 level. That should be the first target, and then it can test the previous high, which was at around 53,500 or 54,000. So Bank Nifty is showing momentum, and RSI is also showing momentum at around 68 now. HDFC Bank is the one, is not the one which is leading the rally, but it is providing momentum. Till the time it is above this 20 EMA, it should be positive, and it had a good week. It took support at this 100 EMA out here. Reliance has bounced. It must trade above the 20 EMA on the daily, on the weekly chart for some strength. And if you see here, it took support at the 200 EMA on the weekly chart. So we'll have to see if it can go above this 1320, 1325 levels, then that would be positive. Then it can try to go up. Midcaps were positive. They were up 6.31%. So this support which I had told you about 10,400, 500 has held. So now once it goes above this 10,700, 800 levels, then it can head to its previous high. Similarly, small caps, they were up 8.64%. They took support at this base at 15,000, which I told you. And then it is bouncing up from there. It has consolidated at these levels for some time. So now the next target should be the 16,800 or 16,900 and 17,000 level. Once above this, then it can again test its previous high. Now I'll cover sectors. So the weakest sector is IT, basically because nothing much is expected in terms of stimulus, etc., or in terms of discretionary spending in the US. Hence, IT was up only 1.61%. It is at 36,000, which is pretty decisive level, and if it breaks, then it can test the 200 EMA at 33,000. So this is the one where which is looking very weak. The sector which bounced a bit was auto. This is a weekly chart. So it is up around 5.85% last week. It has taken support on the weekly charts at 100 EMA. So it has consolidated at these levels. So let's see if it can break above this. Pharma is also bouncing back, but there is a lot of threat here because of impending tariffs, etc., specifically due to generics issue. So it is again now trying to break through the 20 EMA. FMCG, again, it is weak. It has fallen a lot from 66,000 to 50,000 levels. So now this is kind of a relief rally. So this IT and FMCG would be weak. Now the sector which is the strongest, which have been pointing out, is metals. Again, part of reinflation trade, because as there is more and more money supply, it will always move into metals. The other issue is Europe is going to spend more money, lot of infrastructure would be created, etc. So that is why the metals, and China is also saying that we'll spend money, etc. So this is part of that. Now I'll cover 3 stocks today. First is Amararaja and energy and mobility. They are leading manufacturer of lead acid batteries. They also provide, they have a segment on telecom and UPS also, and industrial infrastructure sector, that is in power, railways, and aftermarket also, that is a replacement market. But here the point is that they would be a steady business because autos are not expected to do very well. So they would be steady. They would do around 10% revenue growth and around 10% EBITDA growth every year. So it's not running away anywhere. They would do an EPS of around 58 in FY26 and around 64. So taking a mean of around 60, you can easily give a PE of around 20. So 1200 should be a reasonable target over 1 year. So the EPS is also expected to move in the same around 10-12% range. EBITDA margins are steady at around 12-13%. So nothing much here. They are doing capex to create that facility for lithium-ion batteries. So the margins are lower. ROE is also decent, around 13%. So nothing great here in terms of this thing. And PE has also come down. So if you see the chart, from the high it made in June, July at around 1800, it has come down steadily and now taken support at 950, and now it is bouncing. So in my opinion, every dip around closer to 1000, you can buy, but one should be reasonable. Don't expect it to go beyond 1200, 1250. That should be the fair value of this stock. The other point is, though it is going up, but the volumes are not there. See here in June, July, when it had gone up with big volumes, right? Now what is happening is that though it is going up, but the volumes are not high. So that means either everybody has sold off, and there is no more selling taking place. So whatever little bit buying taking place is taking the stock up. So just keep it in watch. The other thing I will talk about is the India's defense sector. Now, Defence Acquisition Council has accorded acceptance of necessity to proposal worth approximately 2.2 lakh crore under various categories of capital procurement, which promotes domestic manufacturing as per DAP 2020. The total share of domestic procurement has improved from 54% in FY19 to 75% in recent years and is expected to improve further. BL reported an order inflow of 70,000 crore for year-to-date FY25, supported by key orders won in fourth quarter FY25, which includes Ashwini radars, soft-defined radios, data communication terminals for the Coast Guard, electro-optic fire control system for the Navy. They're expecting some more orders. And MOD has signed a contract with BDL for supply of medium-range surface-to-air missiles for the Navy worth 2960 crore, improving the order book to rupees 20,700 crore. That is roughly around 8.5 times its trailing 12 months revenue, with a promising order pipeline worth rupees 20,000 crore plus from the next 2 to 3 years perspective, with large ticket orders like Astra Mark II, QRSAM and MRSAM expected to be finalized. So everything is great, but there are few things one should remember. Acceptance of necessity doesn't mean they have got an order. So that is one. It may take number of years, 1, 2, 3 years, and AON can also may not be executed also. This is just a main point. Second is execution of all of them. The order book is good, but execution is slightly poor. Hence, one has to keep that in mind. Now I'll show you their P&L. So if you see here, the net revenue of BEL is expected to be roughly 27,000 crore in FY26. This is in millions, and grow around 15-20% over next few years. And the EBITDA is also growing, and they are expected to do around 7.4 rupees EPS in FY26 and 9.4, which I have a doubt they will be able to do in FY27 because their execution capabilities are limited. So even if assuming they do around 8 or 9 EPS in FY26 and FY27, and giving it a PE of, even I would not give it more than 35, but maximum 40. At 8 or 9, around 300 to 350 should be a reasonable target. Their ROE, etc., is now steady, nothing great, and EBITDA margins are also normal. Now, what happens with these people is that as the net revenue goes up, so the execution goes up, their gross profits and their EBITDA goes up higher. The reason is because their fixed cost, including employee cost, is the same. So the salary of the employees will not changing much as compared to private sector, where in defense you have to pay top dollar to get talent. Here, the salaries are fixed and they will move as per their scale of promotion and other issues, and the government scales. So what happens here is that if their revenues go up, then they would benefit. But the point is order book. Like I showed you, there are around 20,000 crores of orders, and they have expected to do around 23,000 and 25,000, 27,000 crore in this thing. So order inflow is a point which has to be also seen, because how would they do 27,000 crore if they have order book is 20,000 only? So that is one you have to keep in mind. Now, if you see the chart of BEL, June, July, it had gone to the high of 340, 350 odd levels. And then if you see the trend line is trending lower, it is making lower highs and lower lows. So you have to keep this thing in mind. Now here, on Friday, it took a resistance at 300. So in this momentum, it has moved up from around 240 to 50 odd levels in March and has steadily moved. So there should be some retracement to around this 270, 280 area. And then again, an upstick can be expected. So that should be the level to buy, because right now there is too much of euphoria with this stock. Second is BDL. Now BDL is more interesting. Like if you see FY25, the June quarter, they had abysmal results. The revenues were down and they showed some loss, etc. So their revenues and performance is very, very volatile. So if you remember here, this year they are showing some extraordinary loss also. The problem with them is that for certain critical parts, they are dependent on imports, especially from certain countries like Israel, etc. And if Israel is fighting its own war, then they are not able to adequately supply stuff to them. So their problem is their supply chains. So that is a criticality. Though analysts are expecting that their revenue from 3,000 odd crore, 3,100 crore will go to 6,300 crore in FY27, but I have my doubts. Like to watch this because they have a tendency to surprise on the downside more than upside. So we'll have to watch this Q4 result, because Q4 for all of them are very good. because a lot of booking takes place in the March quarter. Now, expectations are that they will do, let's see, FY26, they will do around 23 EPS. So let's even assume around 23 only. So at 23 EPS, at around 50 times, at 1150, they are fully priced. In fact, I would give them a lower P because of the variability and of their earnings, etc. Now, expectations are their revenues are expected to go up, but generally in FY23 and 24, the revenues went down, and EBITDA, etc. So ROE, etc. is improved, but these estimates are of no meaning because their performance becomes variable. Now, if you see their chart, so if you see here, it was riding till around 1800 in June, and then the June quarter results came. They were abysmal, and the stock has then fell from 1800 to 900 by December. The correction in the market started in October only. By that time, it had already fallen to 1200, so it has fallen nearly by 33% by then only, and after that, it still kept falling. So there is nothing much to cheer, and then subsequent quarter results have nothing great. Though now there is some order wins, etc., and at 900, a lot of risks are priced in. So now it is moving with momentum. But if you remember, the high it made on election day, the budget day was also at these levels of around 1350 odd. So I would watch out for these 1350 level, but not buy it fresh. Wait for retracement, because at these levels it gets fully priced. So anything beyond this is only euphoria. So one should be careful now. I will take questions now.